Hello and welcome to AI Market News by LM. Before we dive in, let's get the disclaimer out of the way. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Okay, with that covered, let's get right into this week's huge story, a major political standoff brewing in Washington, and it's sending some seriously mixed signals across the financial markets. Right now, all eyes are on Washington, D.C. The clock is absolutely ticking, and we're staring down a deadline of less than 48 hours for a potential U.S. government shutdown. And that deadline is putting the entire market on edge. So, we have a high-stakes meeting on the books. It's really a last-ditch effort to try and get a short-term funding bill passed. The core disagreement, based on the prepared resources, really boils down to healthcare provisions. And this gridlock is casting a huge cloud of uncertainty over the whole economic landscape. Now, this is where things start to get really interesting. When we look at how different markets are actually reacting to this shutdown threat, while the picture at first glance seems completely contradictory, it's a real puzzle. It's truly a tale of two different markets. On one side, you have U.S. stocks, which seem to be just shrugging off the danger, looking to start the week with a bit of a rebound. But then on the other side, assets that are typically really sensitive to risk are telling a totally different story, a story of caution and concern. Let's look at the specifics here. As seen in the provided information, futures for all three major U.S. indices, the S&P 500, the tech-heavy NASDAQ, and the Dow, are all in the green. It seems like Wall Street is really trying to bounce back from a losing week, almost as if it's ignoring the drama in D.C. But the second you move away from stocks, that picture completely flips. Gold, the classic safe haven asset, has shot up to a record high. That's a textbook risk-off move. And at the same time, the US dollar is getting weaker against key currencies like the euro and the Japanese yen. So what gives? And here's the key to cracking this code. The answer isn't just about the shutdown itself, but what a shutdown could actually mean for the Federal Reserve and its ability to make those critical policy decisions. And this lays out the chain reaction that markets are thinking about. See, if the government shuts down, the release of crucial economic data gets delayed. The biggest one at risk? This Friday's non-farm payrolls report, the big monthly jobs data. And without that report, the data-dependent Federal Reserve is essentially left flying blind. They can't get a clear read on the economy, and that could force them to hit pause on their aggressive rate hiking cycle and maybe even adopt a more neutral or dovish stance. And that right there, that's the logic. That's what's driving the moves in the currency and bond markets. The market is starting to price in this idea that political gridlock could actually force the Fed to pause its hawkish policy, and that's what's making the US dollar look a little less attractive. To get an even broader sense of the market's psychology right now, we can turn to the Fear and Greed Index. It's a great tool that pulls together 7 different indicators to give us a single reading on whether fear or greed is the main emotion driving investors. And what's really fascinating here is how the individual parts of the index reflect the split we're seeing in the market. Some parts, like safe haven demand, are clearly flashing fear. Bonds are outperforming stocks. The VIX, the market's fear gauge, is also creeping up. But other components like stock price strength are still looking resilient, which helps explain why stocks are holding up. So the overall picture, it's cautious for sure, but we're not seeing outright panic. Of course, this standoff in Washington isn't happening in a vacuum. To get the full story, we need to kind of zoom out for a second and take a quick look at the broader global economic picture. And when we do, we find some pretty notable bright spots that are providing a nice counter-narrative to all the political risk in the US. Over the weekend, for example, China reported a big surge in industrial profits, a great sign for their manufacturing sector. And over in Europe, Spain's strong economy earned it a double credit rating upgrade from both Moody's and Fitch. Okay, so with all that context, let's look at how this all sets up the week ahead. Looking at the economic schedule from investing.com, it seems pretty packed, and it's really setting up a direct clash between crucial data releases and all these political developments. So, assuming the government actually stays open, we're expecting a flood of U.S. labor market data. We're going to hear from Fed officials today, we get JOLTS job openings on Tuesday, and the ADP private payrolls report on Wednesday. But the main event, Friday's official non-farm payrolls report, that's the one with that giant question mark just hanging over it. So, as we navigate the week, the central theme is just undeniable. The market is caught in this huge tug-of-war between the political theater in Washington and the fundamental economic data that's supposed to guide decisions. The shutdown is the ultimate wild card because it threatens the very flow of information that markets need to function.
Which leaves us with the ultimate question for the week, right? In this battle for control of the market's narrative, will politics ultimately trump data? It's going to be a fascinating test of what really drives markets in moments like these. Thanks for watching. Don't forget to like and subscribe.